Try to make my coloring better.
Dub, you should have saw an invite to become the presenter. Did you see that come through?
I have not seen.
It looks like it assigned you. I think we're good.
We're good. Okay. What's up? So you can hear me all right, I guess.
Audio's coming through.
So we've got a few people coming to join us here today. Nice, a few of these names. I think we'll get going in about 5 minutes or so. We'll let people join in. Better figure out what I'm going to talk to you guys about today. So Zach, I guess, are you able to field questions from the group?
I am. There's a chat function, and if they'll go in there, then I will notify you as they come.
Okay. So we're getting ready to start here in probably, what, just a few minutes, probably 5 minutes. So hope we have a meaningful discussion here today. I would just ask as we have this group, as you start joining, if you'll just put your microphones on mute. And we can try to keep the noise to a low roar. I don't know, Zach, is there a way as the...
Yeah, I'm muting most people. They come through here. Additionally, I will be monitoring the chat this entire time. So if anyone has questions, I will make sure we get them to JW and get them as part of our webinar presentation today.
Great. Sounds great. Thanks for setting this up, Zach, and getting this coordinated so we can get this information out to everybody. So it looks like we have about 27 people here who've joined us so far. We'll give it just a few more minutes until it's 4 o'clock, and then we'll get going. I haven't seen some of your guys' faces in a while. Let's pop up here. Good to see everybody today. Hope everybody's healthy and well, and yeah, surviving these crazy times. I don't think in my 22 years of practicing accounting, I don't think I've seen anything quite like this before. It's pretty amazing to watch entrepreneurs and people as they deal with these changes, you know, these coming our way to see how they are all dealing with it. So it looks like we're up to about 41 participants. I have a son. He's just he turns 19 in a couple days here, April 17th. He has Down syndrome, and he came up to me the other day and he was like, he said, Dad, is coronavirus? And I was like, not quite over yet. He said, I just want to see my friends. You know, I want to hang out with my friends. I said, I know, we all want to hang out with our friends, but give it just a little bit longer. So, it's good to see the stock market up. It's good to see some of these medical announcements that are coming out. So Zach, we've had our max of 50 participants. We might have to bump that user number up if you can. Well, it is 4 o'clock, so let's go ahead and get started. Zach, do you want to give you just a minute to bump up the user capacity?
Give me just one moment, Dub, and I'm on it right now.
Okay. Thanks for your patience. How many people to expect to join us today? So, and we'll just bump up our user capacity to a few more users. So anybody else feeling like Tate? Like you want coronavirus over so you can go hang out with your friends?
That's go in. Here's my hand.
All right, Dawn.
Yes,
Yeah.
Here from Jordan too. I'm done.
I think we all need to run over to JW's house after this is done. You know, have a lift the celebration of the virus being lifted.
Yeah, let's do it. I got this huge alert on my phone today from Wasatch County. It was like, my phone started buzzing like it's a national emergency, and I guess they extended the stay-at-home order for a couple weeks through May 1st up here. So we had to cancel our Hawaii trip. Like, we're not quite sure what we're supposed to be doing. Brad and I are saying, well, and we're used to doing something to celebrate that. It's kind of anticlimactic without an actual deadline, but it's actually like Trail to Ride or something up here in Heber. So,
The upgrade has occurred.
all right. Yeah, it looks like we have people, more people joining us. So let's go ahead and get started. I know you guys' time is valuable. Committed that we'd have this started at 4 o'clock, so we'll get going. What a crazy few weeks. Part of this new law that came into place. I think it signed into law by Trump on, I think it was Friday, March 27th. And here at Davies Island, we saw that law come into place. We were reading it early. We saw the rush that it was going to create with the banks. We've actually worked with a lot of local lenders and educated them on how we think they should approach this. We were on the phone with Zions Bank executives on, I think it was the Saturday morning following, actually a couple Saturdays following, and helping them prepare. So anyway, hopefully you guys have been able to get your PPP loans applied for. Hopefully you guys are starting to hear back from the banks. I know some of the banks have been, well, all of the banks for the most part have been really struggling with how to get this implemented for the masses because there's a lot of interest in these loans. So the big thing that we want to talk about today, though, now is that if you received your loan or you're anticipating receiving it, that these loans can be a very useful financial gift that comes from the government during this crazy, unprecedented time. But let's not overlook the details of qualifying to having your loan forgiven, because the last thing that you guys need, we all need right now, is to receive this loan, spend it, and then have to pay it back. So we want to talk today about what are the things that we need to do to make sure that this loan is forgiven and that this money we don't have to pay back. So here's a couple things that we need to talk about today. Number one is that you're going to actually need to apply with your lender to have the loan forgiven following this covered period, which the covered period ends June 30th, 2020. So you're going to have to make application with your lender and say, hey, look, I would like to have this loan forgiven. We don't know the process of what that's going to look like yet, but you will have to take action to be able to request forgiveness of this loan. The next thing is you're going to need to provide detailed documentation to your lender that they have to then provide to the SBA, proving that you're qualified to have that debt forgiven. So yeah, we're going to have to be able to provide more documentation on that. So here are maybe some documents. Here are the qualifications you're going to need to meet to be able to have your loan forgiven. The first thing is that you've spent all of your loan proceeds during the 8 weeks following your loan origination. So if your loan origination date was, let's say, April 1st is when you signed your loan documents and you got your money, you're going to be able to, you're going to have to spend all of that money within 8 weeks following. So you got a limited time to spend it, and you're going to need to spend it on the following things: payroll costs, and within payroll costs, we're talking about health insurance, salaries, wages, retirement benefits, and state payroll taxes. Those are all qualified. And we're talking about W-2 employees. 1099 subcontractors don't count in this calculation. So that's something to keep in mind. And there is a limit on what you are able to pay your employees. It's an annualized limit of $100,000. If you do the math, it's basically about $15,385 during this 8-week period. So we can't pay our employees more than that to get the loan forgiveness. So we have to spend it in 8 weeks on payroll costs, mortgage interest qualifies, rent, and the rent is for leases that were enforced prior to February 15th, 2020. So if you've recently entered into a lease after COVID-19 started, then those leases are not going to qualify. Also, utilities. It's for utilities that those access to those services, again, began prior to February 15th, 2020. Utilities under the code are defined to be electricity, gas, water, telephone, internet access, and they also define it as transportation inside of the code. So transportation seems like an interesting one to include in utilities. We don't have any defined guidance on what that entails or what that means, but that is included in the code. Electricity, gas, water, transportation, telephone, and internet access, all of which services began prior to February 15th, 2020. The other thing we're learning from the SBA is they want you to spend at least 75% of your loan proceeds on these payroll costs. So they want 3/4 of the money going towards payroll. They give you the other 25% to put towards these other things. Okay. So that's basically what you need to do is spend all that money in 8 weeks on those items. But let's move to the next section, which is, can my loan be reduced? Can my loan forgiveness be reduced? And the answer is yeah. The code is really specific in a couple of things to make sure that you receive loan forgiveness on all of your loan proceeds. The first one that they mention in the code is a reduction of full-time equivalent employees. Okay, so otherwise known as an FTE. Okay, so full-time equivalent employee. A full-time equivalent employee, by the way, I've written an article and I'm just kind of following this article as I present today. You can find that article on LinkedIn. It's either on, I think, the Davies Allen LinkedIn page or my personal page. But there is a calculator where you can go to be able to calculate what your FTEs are. And so you can follow that link. FTE calculations basically follows healthcare.gov. And so basically Obamacare, when they defined what an FTE is, and they use 30 hours. They use 30 hours as the equivalent of a full-time employee. So basically the calculation is full-time equivalent employee. Let's say you have somebody that works 35 hours a week or 30 hours a week. That is one FTE. But then let's say you have 2 part-time employees, and those part-time employees work 15 hours a week. They would combine to be 1 FTE. So if you had those 3 employees that I just explained, you would have 3 FTEs, or sorry, excuse me, 2 FTEs. Okay. So the way the law reads is that your loan forgiveness amount may be reduced if you reduce the number of your FTEs during the 8-week period. So the formula is basically, in the code, it says the quotient or the percentage of your FTEs during the 8-week period following the origination date of the loan divided by the FTEs of your pre-COVID-19 work environment, your business. So I'll just give you an example really quick. Hopefully this makes sense. Let's say that you had a loan of $100,000 and prior to February 15th, you basically had 10 FTEs. And then during the 8-week period following your loan origination, you had 7 FTEs, then 70% of your loan amount, or $70,000, would be forgiven. So the government is trying to encourage you to retain the same number of employees in this calculation. Okay. Now, then the next question is, well, when do I look at, how do I calculate my pre-COVID full-time equivalent employees? Do I look at last year? What time periods do I look at to make that calculation? And the law basically gives you 2 options. You can look at January 1 to February 29th, 2020. So you can look at those 2 months and calculate your FTEs. Or you can look at February 15th, 2019 through June 30th, 2019 and calculate your FTEs last year, basically last year at the same time. And whatever formula you want to use, or whatever time period you want to use, either January, February 2020 or February through June 2019, it's your choice. Okay. So that's the FTE calculation, where you need to basically keep your equivalent number of employees during these 8 weeks the same as what they were pre-COVID-19 to be able to receive 100% loan forgiveness. Okay. There's another option that we need to think about, or not option, but another issue that we need to consider when looking at your loan forgiveness, and that is if you reduce the pay and salary or wages to your employees more than 75% during this 8-week period, then your amount of loan forgiveness can also be reduced. So the government also says, we don't want you just to keep the same number of employees. We also want you to pay them the same amount during this time period. And so here's how the loan forgiveness calculation works if you pay your employees less during this 8-week period. Basically, we look at each employee during the 8 weeks and what you paid them during the 8 weeks. And if you paid them less than 75% of what you paid them in the previous quarter, then the difference between the 75% and what you actually paid them will be reduced from your loan forgiveness. Okay, so let me give you an example. Let's say I've got an employee named Joe, and Joe was paid $5,000 per month during the previous quarter. So let's say this employee worked January, February, and March, and his average pay in that first quarter was $5,000 a month. Okay. And then let's say I've retained Joe, and now I've got my loan, and I've said, Joe, I'm still going to pay you, but I'm going to pay you $3,500 a month. Business is tough. I got to cut your wages. So I pay him $3,500 a month during the 8-week period. Okay, $3,500 each month. Then the loan forgiveness would be reduced by $500. And let me tell you how I came to that calculation. If I take $5,000 and I subtract off what he was previous paid, and I subtract off $3,500, which is what I'm now paying him, I actually reduced his pay by $1,500 per month. The law only allows me to reduce it by 25%. So I could go down $1,250, $1,250, which is $5,000 times 25%. The law says I could pay him $3,750. I only paid him $3,500. So my reduction was $250 more in that month than the law allowed me to. And there were actually 2 months right? It's 8 weeks. So I need to reduce, I won't be forgiven $500 of my loan because I dropped Joe's pay too much. Okay? So that's an example. So basically, those are the components that you should be aware of to make sure that your loan's fully forgiven. So we're looking at, again, make sure you spend all the money in those 8 weeks on payroll, utilities, rent, mortgage interest, and at least 75% goes towards payroll. Make sure that you keep your FTE count up during the 8-week period, and make sure that you keep your wages up at least above 75% of what they were paid in the previous quarter. And then you should be in good shape. Now, we're going to come to the end of this discussion and open it up for questions. But let me just keep going for another minute. And I might answer some of the questions that you might have already been thinking of. So the law has, I call it a safety net. It has some additional language to talk about 100% forgiveness. It basically says if there are employers that reduced their FTEs between February 1 and April 26th. So can you guys think of some of those, who some of those people might be, right? The ones that come to my mind immediately are, movie theaters, dentists, restaurants, people who really had to reduce their workforce during February 15th, 2020 and April 26th. I know the ADA came out and said dental offices, you got to close. A lot of municipalities, like up here in Heber City, went to the restaurants and said you can no longer take dine-in customers. So if employers reduced FTEs between February 15th, 2020 and April 26th, 2020, and they reduced wages and salaries to those same people during that time frame. So if that's the criteria that you find yourself in, you cut pay, you basically went through a period of layoffs or furloughs. The government says if you restore your FTEs to pre-COVID levels by rehiring, and if you restore their salaries to pre-COVID-19 levels by increasing wages, and if you do that by June 30th, 2020, then they let you out of those two previous reduction formulas that I just explained. So there's somewhat of a safety net that says, even if you did reduce your FTEs during the 8-week period, and even if you did pay less than 75% in the 8-week period, if you were in this category of actually reducing your employees in that time period, we're going to allow you some grace and say, as long as by June 30th you restore to pre-COVID numbers, then we're going to be in good shape and you can have 100% of your loan forgiven. Okay. So that's an interesting conversation. I'm going to pause here for a minute. And let's just have a discussion about maybe some rumors that are out there, and there might be truth to them, but there are some banks who are actually saying, look, we're not going to base your loan forgiveness on FTEs, period. We're just going to base it on pay, like as long as you use 75% of this money to payroll and you spent all this money, we're going to forgive your loan 100%. Some banks are taking that position. It's interesting. It's creating some confusion, and it's not clear what the source of that information is. Because the law, the code is very clear. The code is what I just read to you and explained to you. If you go to the SBA's website, the SBA's website discusses FTEs and that calculation. Okay. If you go to the Treasury's website, the Treasury has put out a document. It's basically SBA 2020-0015. And the document is basically saying, this is how we plan to implement section 1102 and 1106 of the code. And those are the two code sections that I just tried to summarize and make simple for you. But this document, SBA 2020-0015, explains how the SBA plans on implementing this code. And it is silent to FTEs. Okay, they just don't address it. They ignore it. So perhaps that's what banks are relying on, is the silence of the SBA in addressing the FTE formula in this most recent document. But as a tax, code junkie guy who likes to read this stuff, I think we have to base our understanding on the code and the law that was passed by Congress, unless Treasury or the SBA comes out directly and specifically and says, we have Congress's permission to no longer implement the FTE calculation. But at this point, it seems like there's some disagreement in Washington on how they're going to implement that. But I think to be on the safe side, if you have money and you're worried about it, we have to follow the law, and the law says the FTEs matter. So with that, I think that's an interesting discussion. We'll have to just keep watching the news, watching the website. I emailed ppp@sba.gov, thinking they'd give us some guidance before today, but they didn't. So, if anybody has information on that, I'd be open to hearing it and learning it. Let me just kind of finish a couple more things here. If you get to the end of your 8 weeks and either you haven't spent all of your money on those qualified purposes, or if you haven't kept your FTEs up or you've underpaid your employees, the remaining balance becomes a loan. It's not forgiven. It's a 1% interest rate over the next 2-year period. So it becomes a loan. You have to pay that portion back. The rest of it would be forgiven. You don't have to pay it back. And by the way, the code specifically says that that loan forgiveness is not taxable, okay, to the business. So it's interesting that the law is silent about the expenses being deductible. So it's our opinion at this point, without receiving further guidance, that employers are going to be able to deduct the payroll costs and the rent and the utilities, but not have to claim the income, which would be a double, whammy benefit for you as an employer. So basically, you get to take a tax deduction with money that you didn't have to pay tax on, which is fantastic. We'll see if there becomes clarification in the future, but as of right now, that's what it looks like. One more accounting suggestion that we have for you guys is basically to assist you in the requirement of being able to prove that these PPP loan proceeds were used for the previously mentioned expenses. We're recommending that business owners create separate checking accounts to hold these loan proceeds in. And then we're recommending that you pay payroll, rent, utilities, mortgage payments directly from that account, because that will ensure that these loan proceeds were only used for qualified purposes and make it very easy to prove to your lender, to the SBA, what the money was used for when it comes time to apply for loan. So that's pretty much what I had prepared to deliver to you guys today. Again, I can direct you to the LinkedIn article that I wrote, and you can read through it. Basically covers the same things I just covered.
You would have known more on transportation.
So with that, let's open it up to questions. I'm sure there's some people that have questions.
Hey, JW, just really, sorry, was somebody else jumping in?
It's Brendan.
Let's rather than having 52 people jump in with questions verbally, let's just send chats, and you can send them to, I think it's to the Davies Allen.
It's just right inside the webinar software, both. And just for everyone's clarification, if there's been some weird bumps or delays, we've got about 30 of us that have joined on a separate webinar call we had to initiate to share your screen, JW, so that they could see and hear you. So I do have several questions I'm going to maybe run through, and then we could open it up to others. But yeah, if you want to drop anything out in the chat interfaces in either of these webinar softwares, I will kind of pass those on. So we'll start first, just kind of to talk to and ask, has there been any discussion of extensions of the PPP requirements from that June 30th deadline? We ask this because we still haven't seen the PPP loans come through, and we're trying to manage kind of work and revenue as we're waiting for this money to come through, along with the furloughing, etc. There's a chance we could have little to no work between now and June 30th.
Yeah, that's a great question. I have not heard any rumors of extensions of those deadlines. If you do the math and you say, all right, well, we need 8 weeks, basically you'd have to get these loan proceeds by May, 1st or 2nd, to be able to have the 8 weeks to be able to deploy the money by June 30th. It's speculation at this point. If I were to say yes or no, we haven't heard. There are pushes in Washington right now for a second round of funding. Looks like that money is running out, and so both parties seem to be wanting to get additional funds. If additional funds are made available, it's already April, whatever it is, 14th today. I could easily see people getting these loans post May 1st. And if these loans are given post May 1st, the government would have no choice but to extend that June 30th deadline. So that's just me thinking through the situation logically. Let me address the question of, if I have this money now and my restaurant's closed, how do I spend the money? That is a question that's perplexed a lot of people. I've talked with a lot of dentists, a lot of restaurant owners and others about it. It seems that the government's less concerned about them doing work as them just getting the money. The government is using employers as the pipeline to deliver money to people. And they just want you paying people. Now, I also have some really creative clients who are saying, well, I can't necessarily have my employees come in and clean teeth, so I'm going to be creative. I'm going to have them do other things. You know, my office needs repainted. It needs recarpeted. I need to improve my filing systems. Right? I need to upgrade my IT. So there's nothing in the code that says what type of work the employees have to be doing. but just that they need to be paid employees. There's also nothing in the code that says it has to be the same employees that were employed before. So a lot of people this is going to be a time of turnover. We're learning a lot of interesting things about people. A lot of employees are looking at this as like a virus vacation, right? It's an excuse. And then we have it's an excuse to not have to work. And then you have the complexity that some people can actually even make more on unemployment than they can make at work. So that adds a level of complexity. I will make a comment on the unemployment. I was speaking with a dentist a couple days ago, and he's like, "My people don't want to come back to work. Like, how do I deal with this?" And my response is this: you put them back on payroll, and you start paying them, and you let them know that they're expected to work as best they can. And if they choose to voluntarily quit because they can make more in unemployment, they've automatically disqualified themselves for unemployment, right? You can only get unemployment if you've been involuntarily terminated, okay, without cause. So in theory, if you call people up and say, "I need you back," and you start paying them and you give them a job, that disqualifies them for unemployment. So that was probably a long answer to a question, but it spurred a couple thoughts that I've been.
As we talk about bringing people back to work, getting our employment levels up during that covered period discussed through June 30th, is there a certain requirement on how long those levels then need to be maintained? Is there for then the next 6 months or the next 3 months, or is that unknown at this point?
There's nothing in the law that says anything about retention. They just want you to restore the FTEs to the pre-COVID levels and restore their salaries and wages by June 30th. The code is silent as to retention beyond that. Clearly, it's the intent of Congress that we hope by June 30th is back to normal. But this law was made about a month ago, which seems not very long, but in today's terms, it's like forever.
If the majority of my non-employee costs being my rent, my utilities that the PPP can cover, my home office in which I operate with remote employees, am I able to deduct those home office expenses, or is that going to cause any issues? Not deduct, but have that be part of the loan forgiveness.
So as long as the home office are these things that I quoted to you, as long as it's electricity, gas, telephone, internet access, rent, you can pay yourself rent for your home office. There's no problem doing that. You have to, it becomes a deduction to the business, but then you claim it individually on your 1040 as rent you've earned on Schedule E. But there is no problem with you renting a home office as long as it's a reasonable amount. What you would normally, pay a third party at arm's length transaction. A lot of people own their own buildings, right, in a different entity, the LLC, and so they're paying rent to their own entity, which is fine. It just can't be, those things can't be more than 25% of the total loan amount.
When discussing a covered period, that 8-week period, does it begin from loan origination or when funds are actually received?
The code reads loan origination. So my experience is generally that they are the same day or the day, maybe a day apart. There's really not. I have seen quick funding, what I'm seeing. I'm also seeing delayed application processing. So most people, I would say of the people we've helped with these loans, maybe 10% of people have been funded. 10 to 20% of people have been funded. What I'm seeing right now.
Can any expenses like rent, utilities, etc., be prepaid?
Yeah, the law's silent about that too. It doesn't give us a lot of direction. What I'm hoping is that over the next 2 months, we get some more guidance from the SBA and from Treasury. And so I wouldn't be prepaying anything at this point. I would probably be holding on to my money and then waiting until that 7th week. And then hopefully we have more guidance from SBA and Treasury at that point. And maybe we'll know if we can prepay. Maybe we need to do some extra bonuses to employees to make sure that money is spent. And maybe we need to prepay, but we have no guidance at this point on whether, there's nothing in the law that keeps us from doing that, but there's nothing that we have in writing saying it's okay.
A lot of our questions that we've gotten today, and a lot of you that we work with that we thoroughly enjoy, are business owners. You own your own business. Maybe you have a lot of employees. Maybe you don't. As a sole business owner with no employees, is this just limited to the W-2 income that I take, or will they consider my disbursements / distributions as well?
So when you say self-employed and you say you're paying yourself a W-2, I think it sounds like you probably have you're being taxed as an S corporation. So in that case, if you're an LLC or a corporation that's taxed as an S corp and you're paying yourself payroll, it's only the payroll that qualifies as payroll. Dividends, owner draws, or owner distributions, synonymous terms, those do not qualify as payroll.
Maybe just getting a few questions, maybe just a very quick overview as we talk about self-employed. What's the difference between the EIDL loans, these PPP loans, and as a self-employed person, is there a preference on which one I should be going after?
So I would refer you to a earlier webinar that we did. You can watch Brad Allen discuss those options there. That's probably a good half-hour discussion. I don't think I have time for today. I think today we're trying to focus specifically on loan forgiveness and how do we get these loans forgiven. But Brad Allen does a really good job, and you can find that on my LinkedIn or Davies Allen LinkedIn pages. You can see those posts there.
When we need to have our full-time equivalents back to what they were by June 30th, does that mean they needed to receive a check by that date or during that time period, or can back on board mean that they are now eligible to be paid in July? They're beginning to work again. I've brought people back, but they haven't got a paycheck yet.
Yeah, the law is just pretty lacking details. It just says restore them. So in my mind, that means we should definitely have paychecks before that time period, so we can prove that their salaries are back up to normal by June 30th. Does it need to be one paycheck before June 30th, two paychecks before June 30th? I mean, to me, it says before June 30th. So if we have one paycheck before June 30th, then I think it meets the literal requirement of the law.
I have several questions. If we've gotten our PPP funds, we're ready to go. We start our 8-week period in April. Our 8 weeks ends before the June 30th deadline. We're not able to get back into work. It can't really keep everybody back on now. If I let people go after my 8 weeks, but before June 30th, will that cause an issue in the debt forgiveness?
No, it wouldn't, because As long as the 8-week period, you have the FTEs and you have pay at the full amounts, and you've spent your money, then you've met the requirements of the law. This June 30th is just a grace period for people who can't get them up during that during that 8-week period. And it's basically saying, hey, look, if you can't get your FTEs up during that period, and if you can't get your pay up during that period because your business is still closed, as long as you do it by June 30th, we're going to be good with it. But you still have to meet the requirement of spending the money. If you don't spend the money during those 8 weeks, the government's not just going to say, keep the money and you don't have to pay it back. It's very specific that they want you spending it on payroll, rent, utilities.
Okay. If we had somebody quit voluntarily, does that dock us on this full-time equivalence? Should I go out and hire someone else then? Or am I able to disqualify that from my FTE calculation?
I think you need to rehire. I think if you want to keep those FTEs up, then you need to probably rehire. If somebody just quits voluntarily, they're not going after unemployment because they're not going to be eligible. So, yeah, I would look to rehire and keep your FTEs up.
Are we able to use these funds for any of our 1099 individuals that we work with, or should we be encouraging them to apply for their own PPP loans, etc.?
That's a great question. We get it a lot. And no, 1099s don't count as payroll. So those will not qualify. They need to basically go get their own loan.
If we've been subsidizing employees, or in other words, we've kept their pay the same, even though we haven't had work, can we backdate our 8-week period once the funding actually arrives?
I know nothing about being able to backdate. So what a lot of people are doing is furloughing employees and then bringing them back once they get funded.
Ultimately, does the money have to be spent in that 8-week period or just by June 30th and I'm okay?
Within that 8-week period, the money has to be spent in those 8 weeks.
If I got my loan for $100,000, but I only could spend $80,000 of it on qualified expenses, the other 20 would then convert into a 2-year loan at 1%.
Correct.
And do I need to send that $20,000 back to the bank, or do I have any limitations on how I use that $20,000 2-year loan, or can that be used for any business expenses?
Well, at that point in time, it becomes a loan. And since it's a loan and it wasn't used for qualified purposes, at that point in time, you can use it for other business expenses. It's really interesting though, because when you guys all signed the application, you saw that one of the certifications you make is that you will use this money only for those things under penalties of fraud, right? Like bank fraud. But yet, on the other hand, the law says if you don't use it for those things, it's a 2-year loan at 1%. So it's a contradiction of terms. I think the government just tried to scare people away from abusing the system. But at the end of the day, if you only spent 80 grand and you have 20 grand left, you could choose just to give it back to the bank and say, here you go. Or you could choose to pay that back over time.
If we are short on full-time equivalents, would I be able to hire my children if they've worked in the business prior, or even if they hadn't? Or does that cause any sort of related party issue?
The law is silent on related parties, which is really interesting. They were in such a hurry to write this law that they didn't I mean, business owners, you can still be, your payroll is part of this payroll calculation, right? Up to the 100,000 limit. So we know nothing about, it's really silent as far as who the employees have to be. And I would say as long as you have, if your kids are legitimate employees, legitimately working and helping in the business, there's nothing that is precluding related parties from being employees qualified to be.
A lot of restaurants have been impacted quite heavily by this. Employee compensation is often very dependent on tips.
Tips, yeah.
Is there anything that the law states with regards to that and that form of compensation?
Yeah, it actually includes it the law specifically includes cash tips as qualified payroll compensation. So that's part of the formula that you should be using when you apply for the loan, is including those tips to be able to do your 2.5 multiplier of payroll. And because it's included in the formula to apply for the loan, it's clearly intended to be counted as compensation during the 8-week period as well.
Having non-resident employees that are in the U.S. With, as H-2B or other various permits and visas, we're not allowed to count as full-time employees during the application, according to this person's question. But can we pay those non-resident employees and have that count towards our payroll spending during the 8 weeks?
It does not count towards the payroll spending. The law is pretty specific. They want the money to stay within the U.S. for U.S. employees.
If I get this loan and, blessings from above, I don't have any issues, that my business stays consistent or is doing well, but I wanted the loan as a safety net, is there any consideration on how well the business is doing that impacts the debt forgiveness?
There's nothing in section 1106 that talks about debt forgiveness related to being negatively impacted. There is language in 1102 which says if you only qualify for the loan if you have been negative. At the same time, you've got Treasury. I don't even know how you say his name, Mnuchin, however you pronounce it. He's basically going on live TV and on Twitter saying every business owner should apply for these loans. Before you even applied for the loan, there's basically, I think it's 4 criteria to be able to even apply for the loan. One is you've been negatively impacted by COVID-19 because of a blockchain supply issue. Number 2, because of a business closure. Number 3, because of a decrease in customers or a decrease in revenue during the time period. Or number 4, and I love this one, this is like staffing challenges qualifies. So I don't know of a business that hasn't had staffing challenges. And it's not all 4, or it's not 2 of the 4 or 3 of the 4, it's any one of those things. So I think what Congress's intent is they're trying to use employers as a pipeline to get money into people's hands to be able to keep the economy going. So I think in this case, if you could say you've had staffing challenges, then qualified for the loan.
When running payroll, as many of us on this call know, payroll dates don't always fall neatly within 8 weeks. Does that mean we're going to kind of accrue back for the work done in that time period, or should we be running a special payroll to ensure that we disperse the funds in the given 8 weeks?
Yeah, nice thing about the law is as I understand it, they've made it easy for us. We don't have to worry about when was the money earned and accrued, and what they care about is when the money is paid. So it's a cash basis. Don't think of accrual basis accounting, think of cash basis accounting. They want the money spent in 8 weeks. Okay. So in other words, let's say we got our loan on April 1st and our first payroll is April 5th. That pay period when we disperse the cash on April 5th counts. We don't have to say, oh crap, part of that payroll was, that was all for March, so we're not going to count it. Does that make sense? So they're looking at when the cash is dispersed within those 8 weeks, which is great. It's simple.
And so if we wanted to, we could run an extra payroll to make sure we maximize the forgiveness or whatever.
Yeah, right. I mean, bonuses and payrolls up to the discretion of the business owner. You could have run a special payroll and a bonus pre-COVID, and you could run a special payroll and a bonus post-COVID.
And then we've had several people that kind of were able to join in later due to some of our technical issues. So we're just wondering if you could explain in a little more detail one more time about the forgiveness portion in terms of, hey, if I'm given a loan of $100,000, I only spend $60,000 on the qualified expenses, and can I just give the bank back the 40 grand and all my 60s forgiven and I have no issues? Or is there any early payment issues or returning of fund issues that I'm going to run into?
Yeah, no, there's no early payment issues. You can give the money directly back to the bank. They'd be happy to take it, I'm sure. So yeah, I don't think you'll have any problems with that. They're specifically excluded in the code, no prepayment issues. A lot of SBA loans do, but these don't. So Zach, are they wanting me to go through more calculations of the forgiveness? Because maybe we do that at the end.
Yeah, I have one example where somebody's asking to maybe do one of those one more time, so I'm saving that for any other questions here. That way we could let anybody that wants to hop off. One other question I do have is, in terms of utilities, if I have a business that uses catering vans heavily or freights out, shipping, etc., can I deduct my gas or insurance costs on those vehicles like a utility, or would that not fit?
Yeah, utilities in the code, utilities talks about, it defines it pretty specifically to include transportation costs. We haven't been told exactly what transportation cost is, but as a general rule, I think with this law, it's going to be pretty broad in the interpretation of the code, because again, the purpose is just to help people stay afloat for a couple months. And so they've included transportation costs in the code. So I'll let you guys interpret what that means.
And if I pay, all my utilities, everything is part of my rent to the landlord, so my rent's really high, maybe relative to other industries, I can still just deduct that entire rent amount. I'm not precluded because I, have a triple net lease with a lot of extra things included in that rent fee.
Yeah. So there's nothing in the code that says that triple nets don't count and full service do. I mean, no matter, it just is rent. So again, you just have to make sure that not more than 25% of the loan proceeds goes to rent utilities. 75% has to go to payroll.
And would CAM fees as well be included as part of rent?
Yeah, if not, utilities, right? So I think we're safe on CAMs. Yeah.
Okay. I think now would maybe be a good time, if anyone wants to send some last questions, to maybe just go over an example again. If the employer pays somebody versus, 3,500 versus 5,000 or whatever example you started with, maybe if we could just recover that.
Yeah. So basically, let's just give an example. Let's say we received $100,000 loan. Okay. So now we have 8 weeks to spend that. And let's say that we only spent 80,000 on those qualified expenses and my 8 weeks is up. That $20,000 now becomes a loan at 1% over the next 2 years I have to pay it back. Okay, we'll keep, so that's example number one. Let's say example number two is that I have, let's focus on FTEs, okay? Let's say that I have 40 FTEs during one of those two time periods that we explained, either the same time last year in 2019 or January and February. We have an average of 40 FTEs. And let's say that during the 8-week time period, we have 35 FTEs. So if I do the math and I say 35 divided by 40, so that's, I can't see the sums on my calculator, 87.5%. Okay. And let's say I kept their payroll up for those FTEs. You know, I didn't drop their payroll down. In that case, if I spent all of that money, only $87,500 will be forgiven. I'll have a loan that I have to pay back of $12,500 if I let my FTE count drop. Okay. Now let's give an example that says I paid Joe less than 75% of his pay. Then let's say I normally pay Joe during that time period $5,000 a month. So normally I would pay him $10,000 in that 8-week period. But instead, I didn't pay him that amount. I only paid him $3,500. So I dropped below 75% of his pay, because 75% of 5,000, I believe, is $3,750. So I actually dropped his pay too much during this time period. So I'm going to have to pay back $250 a month for Joe. So I have to pay back $500 in that example because I dropped his pay too low. And we have to do that calculation for every employee that we paid during the 8 weeks that was previously employed. If they weren't previously employed, we don't have to do the calculation. They're a new employee. Okay? If we didn't drop their pay, we don't have to do the calculation. So those are just a few examples of how your loan forgiveness can be reduced. Okay. Any other questions on that? Any other examples you guys want me to run?
Using that example, if the full-time equivalent or total payroll forgiveness rules caused a 20% reduction in the forgiveness, would that 20% be applied against the money I spent or against all the loan? And this is kind of from someone saying,
yeah, the total loan amount. Yep. So let's say in that example, let's just say I got a $100,000 loan. I kept 35 employees, not 40. And if you do them, and I kept their pay the same, then the math is just going to be what the math is. You're going to spend $87,500. That's how the math's going to work out. So at the end of the day, you'll have not spent $12,500, and then you would have to give that $12,500 back. Now let's say in that same example you did. Let's say you gave everybody raises, and you did spend the full $100,000. You still have to pay $12,500 back because you didn't. Your FTE count dropped. Okay.
this is a question.
Did we lose you, Zach? Sounds like we lost Zach, who's our coordinator. I got the sun shining right on me here. let me see if I know how to access these questions. Here's a question from Jeanette. Not all payroll costs are eligible. So if we did use the loan to pay the full amount of payroll costs, then we could end up thinking we spent all the funds, but actually we did not spend it all, right? So, so I have to understand what payroll costs are you referring to, Jeanette, that aren't eligible? Maybe help me understand that question a little better. I know that the employer side of payroll taxes, federal taxes are not eligible. So maybe that's what you're referring to. Yep. All right. Some of the federal taxes. So yeah, federal payroll taxes are not eligible. But keep in mind, even for businesses that get PPP loans, those federal taxes can be deferred until your PPP loan is forgiven. So you don't even need to be making your 941 payments right now. We're going to have another webinar on that next week. But your 941 payments are, well, at least the employer side of those payments is deferred. Okay? So that's that. There's a question that says, can you put the link to the article from LinkedIn you're referencing to on the webinar? Let me see. Yeah, I think so. Let me hit control, put a chat. Hopefully everybody can see that link right there. Check that article out. Is there any other questions? David Kirchheimer says, what about workers' compensation insurance? Workers' compensation insurance is not a qualified payroll expense. Are commissions eligible? Comes from Jake. Basically, yes. If they're commissions that are on a W-2, yes. If they're 1099 commissions, the answer is no. More questions are coming in. We've already done furloughs or pay cuts. We'll plan to rehire everyone on June 30th. The 8 weeks from our loan date will be over mid-June. How does that factor into our reduction in FTEs? If you've done furloughs between February 15th and April 26th, you get that safety net, right? So as long as you restore your FTEs and full pay by June 30th, and I would run payroll before June 30th to be able to prove it, you don't have to meet the FTE test, you don't have to pay test, but you do have to spend the money in those 8 weeks. That's the conundrum. It's like, how do I spend the money in those 8 weeks? And I'll let you guys, figure that out. Mark Bennett says, you said at first you need to request loan forgiveness for the loan when applying. There is nowhere to put that request. Loan forgiveness, you're going to have to make a separate application. After June 30th, after you've spent money, after you've met this criteria, you're going to need to go to back to your bank and make an additional application. Additional application basically where you request to be forgiven of your loan. So that's not done. That's done later. Okay. Lance Black says, the SBA loan docs from the bank don't say anything about forgiveness. Should we be worried about it? It's a standard loan language at 1% for 2 years and says nothing about forgiveness. I wouldn't be worried about it. I don't think the SBA is going to pull a gotcha on this one. If they do, they're going to be, in trouble. So it's very clear in the law these loans are intended to be forgiven. But you have to understand how they're going to be forgiven. This money that's coming to everybody is coming from your local banks, okay? It's not like the federal government has infused billions of dollars into these banks. They haven't. Local banks have taken capital on hand and lent it, okay? The way the loan's forgiven is the lender has to go to the SBA and say, SBA, here's proof that these funds were used as you directed. Please apply my loan forgiveness SBA 7A PPP loan number as you approved it in the application stage and reimburse me the $100,000. And the SBA at that point will give the bank back $100,000 and make the bank whole. Okay? So I wouldn't be concerned about it. When do you apply for forgiveness? After the 8 weeks, says Julie Shelton. Yeah, after the 8 weeks. We don't have any clear guidance on what that application is going to look like, but I can imagine what it looks like. It's going to say FTEs. It's going to say, verify pay and prove that you spent this money in those 8 weeks. I think I missed some questions. Should we separate the PPP funds for any reason? I've heard recommendations to not commingle. The principal was deposited on our business checking account and has since swept into our money market. It's a bit too late not to commingle. I still think it's a good idea to take those proceeds and put it in a separate checking account and clearly pay your payroll, rent, and utilities out of those accounts. I think it's a very good thing to do. Let's see. If there's gross salary cut before you get PPP approval in the loan funds, does this impact forgiveness qualifications? Meaning, if within a certain parameter, like if a cut is made after you submit application, but it's still not approved, could that disqualify you for forgiveness? Yeah. They want you to pay people the average of what they were making the full quarter before. So you have to look and see, what did this employee make in the first quarter, for example, January to March 2020. What did you pay them? And they don't want you to decrease their pay more than 25% of that amount. If you decrease it more than 25% of that amount, your loan forgiveness could be decreased. What happens if I need to terminate an employee during this time? Terminate them and hire somebody else on to keep your FTE count up. Okay. I think that's that. If we don't use the 25% for utilities, can we use that percentage for more payroll? I would say yes. Okay. There's nothing saying you can't pay more than 75% to payroll. They just are saying you can't pay less than 75%. Okay. So I think a lot of people are going to get pretty creative in how they use this money for payroll. I would advise people against, if there's a big chunk left over, just paying, owners and kids. I think there is some subject to abuse there. I think that could come back and bite you. I do think if you're going to do raises and bonuses, you should probably keep them proportionate as you would normally operate pre-COVID. Okay. The relevant per employee pay benchmark period is 1/1/2020 to 3/31/20, not 1/1. Yeah, it's the relevant. The benchmark that they're looking for pay is the previous quarter. Okay, so they're looking at the previous full quarter of what you paid your employees. I think that should answer that. Well, I think that's coming to the end of our questions. I hope you guys found this webinar useful. I hope we gave you some information that you guys can benefit from. If you have further questions, we'll take those, just feel free to send us questions through email and reach out to us. We're happy to continue to work with you guys. It's been a fantastic opportunity for us to help add value. We basically took a little tax hiatus. We probably stopped making revenue for the past, I don't know, 2 or 3 weeks and just focused on this. But we feel like we can help everybody add more value right now with these loans than we could anything else. So hope you guys are well and healthy and stay safe, and we'll chat soon. You guys have a great one.